almost live, and then we can start. And I'll let you know if we get any questions on Facebook, Dee Dee.
Okay.
Dee Dee, we really appreciate you doing this for us. I think it'll be a good group. Maybe they'll have some questions for you, and you can teach us something today. We appreciate you being here.
Yeah, the question is, do we want to learn about all the usual things about what we can write off and what we should be tracking, or do we want to learn about what's happening in 2020?
Some of both.
Both? All right, well, good answer. I bet it's an interesting time for some of you guys, for sure.
I think for everybody in the world, it's an interesting time.
Yeah, true. I think county by county, I guess the rules are varying. So like some of my realtors over here are having like record Julys that are making up for, you know, the even slower slow part of the year. So
yeah. Crazy. It's all over the map.
Yeah, like I don't know. Like, do you buy a house right now? Do you buy a new car? Do you stay put? Do you kind of freak out? Like, what do you do?
We are to go. So, Amy, do you want to introduce our person today?
And if you want me to, thank you guys for joining us today. We have Dee Dee Stone with us, and many of you may have seen her before. She did a great class with us, I think a couple of years ago, Dee Dee, at the Mexican food restaurant. Do you remember that? Was it the Hat House? And I had a really good GDWCAR put that on for you guys. So they are who gave me Dee Dee's contact. And Diana had asked me a month or so ago, hey, who could we get to come and talk to us? And of course, Dee Dee came to mind immediately, because this is what she does every day. She works with real estate agents. That's a large percentage of your business, isn't it, Dee Dee?
That and direct sellers, yeah. So
she has some really good insight to y'all's business and has great information for you. So I hope you enjoy it. Thank you for being here, and fire up your questions on Facebook Live so Diana can ask those for you guys. And Dee Dee, we'll let you take it away.
Hey, everybody. Okay, so I'm not gonna lie, up front, Zoom is a little weird for me. I like to be interactive with you guys and be able to ask your questions and see your faces and your hands. So, you know, they're gonna relay questions to me if you have them as we go. We're gonna talk a little bit about the things that you can be writing off in your real estate business, things that you should be tracking, good ways for you to track those so that you're ready at tax time and why that's important. But I also want to talk to you while I have you as my captive hostages today about all the new things that are happening in 2020, because I don't know if y'all have noticed, this year has been a little bit wonky. And, you know, Congress never wastes a good crisis. They will write legislation like you wouldn't believe, and they have definitely done that for 2020 taxes. So I'm going to start with that because we can do that fast and you can ask the questions afterward, and then we'll talk about all the things that pertain to ongoing tracking and regular expenses and stuff you need to keep up with. But so right now, today is, I think it's Tuesday, July 14th. Tomorrow is the new federal tax deadline for your 2019 tax filing. So my brain is like hyperactive. If you haven't filed your tax return for it is due tomorrow. If you can't file or pay those by tomorrow, you need to file an extension. So be ready for that. But we also have 2 more days if you want to apply for the PPP loan. So back in March, Congress put out the CARES Act, which had lots of different stimulus forms for businesses, people, all of that to go around this coronavirus stuff. One of those was the Paycheck Protection Program. It was supposed to have ended at the end of June or somewhere around there, but they are taking applications for 2 more days. In order to apply for that, you can apply as self-employed realtors. You just need a draft form of your Schedule C for 2019. So even if you're going to file an extension on your taxes, if you can get a draft of the Schedule C to give to your bank, you can still qualify for the PPP loan. The cool thing about that loan is if you use it correctly, which if you're self-employed is pretty easy to do, then it can be forgiven and you won't have to pay that back. So it works out to be a pretty good deal. If you don't have a business checking account and you bank at a larger bank, such as Bank of America, Chase, Wells Fargo, they will not let you do it. They want you to have an actual business checking account. But you can go, you may have to open a new account, but you can go to some smaller area banks. I know Prosperity is doing a lot of these. Happy State Bank, Frost Bank, those are all working with small business owners to get those funded. So 2 more days. And then other things that we have, if you're struggling, I know some people have had a rocky start to 2020, first with the shutdown and the mask mandates and all the different things that are happening. And consumer confidence is maybe a little bit shaky. I was just saying right before we started, I don't really know what to do with 2020. Do you like buy a new house? Do you buy a new car? Do you just hunker down in your bedroom and kind of curl up in the fetal position and wait till it's over? If you're having a tough year and you can show that you were financially impacted by the coronavirus and you have money in a 401k or an IRA, you can take that money out penalty free between now and December 31st. So you don't have to decide today, but you can take that money out. You will pay the taxes on it, but you don't have to pay the penalty. The taxes can be paid over 3 years, and it doesn't appear that you get to pick how much you pay taxes on each year. It looks like it'd be divided a third, a third, a third. But to be perfectly honest, the IRS in true fashion has not given us any guidance on that yet, because of course they will give us guidance, probably on like November 1st or heck, December 30th, who really knows. But if that is something you need to do, that resource is also available. Let's see, those are the biggest ones that, have an immediate impact. There is some new legislation passed only at the end of December last year. I can't find the final bill on that. If you had a baby, you can take $5,000 out of your 401k plan without a penalty. You can use a 529 to pay up to $10,000 on a student loan. Couple of things like that. If you guys want to send me an email, if you have questions about that, or just add your email to my contact list, I'll be sending out more information on those things after this tax deadline. So now we'll talk about all the exciting things that you really want to know, which is what can you write off on your taxes? And
Question?
Yeah.
Yeah, question. When you were talking about being able to use, if you've been financially impacted through COVID and you can prove that, what do you have to do to prove that to be able to withdraw from an IRA without penalty?
Great question. They haven't given us that guidance yet. The legislation in the CARES Act literally just says if you were financially impacted. So I would assume that you would have to give them a comparison financial, whether it be your Schedule C or maybe your full tax return, because what if a spouse that has a W-2 job got laid off? You're still financially impacted. So I think it will, honestly, I don't know how they're going to monitor that. I don't see it being feasible that they could, but I would say you probably have to show a dip in income somewhere. So, yeah.
Equal to the amount that you take out?
Not necessarily. There is no guidance that says that whatsoever. It's very vague and literally just says if you're financially impacted.
Interesting.
So, yeah. Cool. Not gonna lie, with all the craziness that's going on, I mean, I've worked with government and in government for a while, and so I don't trust anything they're doing. I'm at this place where 2 straight days I literally couldn't do tax returns because I'm like, why in the world are we funding this madness? Like, let's just put a halt on that. Anybody got some spare kids they ain't claiming? So I don't know how they're going to enforce any of the stuff that they're saying, but that's the very, very broad guideline they gave us. If you're financially impacted by it, you can take money out penalty free and be taxed on it over 3 years. Now, the other thing is if you decide to put it back, so say you take out 60 grand, 20,000 would be taxable for 2020, 21, and 2022. But if you put the money back in, then you won't be taxed on it. So kind of a fancy feature that, again, I don't know how they're on, but they don't do their regular job well. Who knows? All right.
Do you know
so-
when the Congress will come back and give us some guidance on the forgivable aspect of the loan? It seems it's very convoluted and even the banks don't have answers yet. Do you know when we might get some answers? Because
We have the final application, just none of the banks are taking the forgiveness application since they gave you 24 weeks now instead of 8. If you go to sba.gov and look under their COVID-19 resources, that final application is there. There's a short form and a long form. But all of those things have been put into place. The only question I know of that they haven't addressed still is whether or not office gets to count at all for any of the renter utilities. So
can I ask you questions about the PPP loan, or would that be
Sure.
derailing this conversation?
go ahead. There may be people that haven't applied yet because they don't understand it and they may leave here and go get one. So go ahead.
So I applied and received a PPP loan and my income that I asked for was based on the 8 weeks number, and I calculated everything based on the 8 weeks number. And so I collected unemployment prior to the 8 weeks, and I also have started collecting unemployment after the 8 weeks. I never overlapped in any point in time because I didn't want to have to pay anything back. So does that mean that I'm still going to have that? Does that mean I'm going to have to pay some back? I feel like because they changed it from 75% to 60%. And then that means I'm going to have to pay something back. And I'm like, I never, ever, ever intended to have to pay anything back. I don't understand how that works.
Okay, so no, what they changed on the 75% down to the 60% is the amount that has to be used for payroll. So say that you're a
I
big
used
company
100% for payroll.
and that's okay, but the minimum was 75% had to be used for payroll. And then when they changed it, it was 60%. So if you got a $10,000 PPP loan, originally 7,500 had to be used for quote unquote payroll. The other 25% had to be used for rent, utilities, things of that nature. When they redid the legislation to give you 24 weeks, they reduced that threshold to 60%. So of the 10,000, 6,000 has to be used for payroll, and the other 40% could be used for rent and utilities. Now, you have to remember, no one in Congress is self-employed, right? And even if they've owned a business, they probably haven't owned one at this level in 2 decades, because the people that are writing the laws are 873 years old, and they're so out of touch with reality that it is not even funny. So when they say 60% for payroll and the other 40% for rent and utilities, they're not factoring in that we are in what they call a gig economy. And we have more people working at home and home officing than they realize. So they never factored that in. When they made that rule, they were addressing the Amazons of the world on a slightly smaller scale. Companies that have large payroll of other employees, people that pay rent for an office space or a commercial building and pay utilities on that space. That doesn't apply to you. So most of you, 100% will be used for payroll and still be forgiven as long as you met that minimum threshold of the 60%.
Okay.
They
Okay,
really
but
should count it right, these rules.
do you know anything about the unemployment? Because I took unemployment prior, and then I had the PPP loan to cover me, and then I've taken unemployment after because I'm just still not. I mean, I'm at a 90% loss on income from my other business that paid for my entire income last year.
Unemployment is taxable, but as long as there was no overlap, like, you used the PPP for payroll and then you got unemployment, then you're fine. You will be taxed on the unemployment income because it's taxable income, but outside of that, you have no issues.
Okay, that's good. Good to know.
Yeah.
I feel way better. I have
Yeah.
not had anyone be able to answer my questions. Thank you.
Sure. So if you're on this and you are struggling with income, you as a self-employed person, right now, we're in the one time in history where you can actually file for unemployment, even though you don't pay into unemployment. So if you go to texasworkforcecommission.com, there's a link to apply for disaster unemployment. I don't know that they're still doing that. Or if they've extended it. It seems like the applications were going to end at the end of last month. But
Well, I'm one of those that's like a gig type thing. I'm 1099, I guess. And so what they did is they declined me. So I got my decline letter and I sent them proof of my my schedule, not my Schedule C, but my profit and loss statement,
right.
to show them what I did actual last year and that I do pay taxes on it. And somehow, I mean, literally, they said to just go in and still apply for a payment. And even though they say they'll decline you, I magically had money appear in my account. Not even joking. It was so weird and magical.
Cool. Yeah, so
So-
I would say go ahead and apply for it. If they're still, just apply. If they disqualify you, they disqualify you. But this says extended benefits up to a 13-week extension. So I would go ahead and try to apply if you're still struggling with that. Now, unemployment income is taxable income. But hey, your tax rate's not 100%. So at least it could help you cover the gap until we get fully back up and going again. Okay, so.
I got a question real quick.
Yeah.
On that unemployment, though, the federal or the government has kicked in an extra $600 per week on that, but that $600 per week, I think, ends by the end of this month, I think. So you could get the addition, your unemployment base rate, whatever they determine that to be, but your $600 would not be after this, unless they re-up or redo the legislation on it. But the extra $600 that everyone got in addition to their regular unemployment, I think ends on like the 25th or something of this month. So
Yeah, I think a lot of this stuff is slated to run out. So I would apply now to get what you can, if you can. And then I do know that they're talking about a second round of stimulus and a bunch of different stuff. Honestly, I hope it doesn't pass because quite frankly, our country can't afford this debt. But secondly, if they jack up any more of the tax rules, I think I might just throw in the towel. And I don't know, go wait tables. Oh wait, we can't wait tables because you're not allowed to go eat. I forgot.
If they don't pass the stimulus, then people will lose their homes. People will not be able to pay their mortgages. People will not be able to buy groceries and basic things that they're able to buy. And if they don't give us more unemployment and more ability to do that stuff, then we're going to be screwed.
Yeah, y'all don't want to know what would happen if I was running the country. Mostly we would all go back to our regular lives, but and we've totally revamped the tax laws. But since no one wants to let me be in charge of that, I'm going to start a Twitter campaign. So if y'all want to join in, we're just going to ask Donald Trump to put me in charge of the IRS for 6 months. I think we could overhaul in 6 months. In the meantime, how can we lower your taxes ongoingly? In 2020, this may not be as big a problem because we are, some of us aren't making as much income as we were in 2019. But there are different things that we can write off. And I will caution you that somehow they are managing to be more stringent on the rules when they audit you. So this morning on my Facebook, I shared a tax court ruling that came down this week that said, I'm going to pull it up here. They disallowed someone's travel, even though they had a mileage log and a calendar. So I would say for many people in real estate, particularly, that your auto expenses are a pretty good chunk of your tax deduction in mileage, or if you're taking the actual expense method. So when you write off your vehicle, you have two choices. You can take standard mileage, which is just the business miles you drive times the standard mileage rate, which for 2019 was 58 cents a mile. Let's see what it is for, sorry, y'all, I'm still working on 2019 taxes. So we'll see what they just made it for 2020. It's 57.5 cents for 2020. So you track your miles, and then that was pretty much it. If you do actual expenses, you do you can do gas, repairs, maintenance, car washes, car insurance. On both methods, you could do interest on your car loan and parking and tolls. So either way, though, you have to track mileage, and you have to know how many miles you drive total and how many miles you drive for business. And then your percentage of your deduction is based on that if you do actual expenses, or you take the standard mileage rate on those business miles if you're using the standard mile rate. Now, this tax court case that just came through, the guy kept a mileage log, and he documented this particular guy had a farm, and he kept an Outlook calendar and a mileage log, and it showed every time he drove out to his